Hello, and welcome to a simple analysis of Orkla. It is a stock that is defensive in nature. So, what is actually Orkla? Well, the interesting thing about Orkla is that they have a lot of companies and they have a lot of products under them. Orkla was founded in 1904, so it's quite old. It is originally from and based in Norway, and it is currently in 22 countries. Some of the focus areas of Orkla is snacks, or main focus areas might be more correct to say. Home equipment, personal care, food and drinks, clothing, and health. They also are really starting to go for pizza, like selling pizza stores. And straight up, they have one electrical power plant. Then the question is, why should you own Orkla? Well, Orkla is a defensive segment. One of the main things about this segment is food. People need food no matter what. You might not afford to travel, but you certainly can afford food. Hygiene as well. Yeah. Maintenance of your home, painting, defensive segment. They have a good dividend that is around 4.32, at least at the current date. Historically, the dividend haven't been that good. It's been around 2.5 to 3-4%. Orkla have a very good control of the market in Scandinavia, or at least in Norway, and it's very diversified. Why should you not own Orkla? Well, they do literally have a low growth, at least on the bottom line. They have an unstable evaluation. You will see that later. Price and cost pressure, and they have increased their debt 5 out of 8 years. Like for me, like I really don't like debt, but yeah, like they have done that. So that is something I don't really like. Simple key numbers. So the margin, it is around 9%. It's not very good. It's passable, but not very good. The return of assets, I would say, is quite low, 6-7%. Other shares often have a lot higher assets, like return on it. Return on equity between 10 and 12%. It's okay, not too good, but it's okay. You have the growing earning per share that is almost 15% since 2014, but it's a little bit fake, I guess you can say, because the change in EPS from 14 to 15 was 50%. That helps when it's not more than 8 years. The price per earnings, the values there, they have varied from 12 to 20%. So this indicates that you will have a lot of chances to buy into the share. So if you like the share, you actually have a chance to get a good price. Orkla falls. Defensive, but yeah, not defensive. How is Orkla in 2022? Well, they've had a downturn of 21.41%. The Norwegian stock market is literally at 0%. I don't think that they have fallen at all, like if you base it on the Oslo, like the stock market we have here. Of course, that is Norway is a little bit weird, different. Oil, shipping. Yeah, no more in there. We've had headwinds from the government. And the prices and shareholders, well, basically it's a lot of resistance. Government went into Orkla in 2019 or 2020 and did actually go through their papers. Like they were raided to find out the prices and what they sold the goods for to see if it was anything bad. And this might in the future cause an issue because Norgesgruppen, which is one of the biggest companies in, well, not necessarily the biggest companies in Norway, but at least they are the biggest regular store. Like they have a lot of companies under. They get like prices up to 25% cheaper than the second biggest and the third biggest. So this creates some issues politically. Shareholders don't seem to like the stock, as you can see. It's very varied. If it's a spook, they will fall out, jumping out. So yeah, huge evaluation falls, not too trustworthy that way. Orkla is though continuing the investments. That indicates that they still keep getting some money. Their margins around 9%. It might be a difficult thing for them though. The prices, they are changing normally 2 times a year, at least in Norway. In periods where you can experience like high inflation, their margin might struggle quite a lot more than what you would expect. And it's simply because they're not allowed to change their prices. They make these deals 6 months at a time with these stores. The top line have increased every single year since 2014, which I think is a good job for a company that have, well, increased 20% in value since 2014. The bottom line have not really increased that well, but it have done well. Like it was like a struggle in 2018. On the right side here, you have the margin numbers, and like you can say, it's mostly around 9%. Worst time was in 2018, but in 2017 they actually did sell quite a lot. In 2017 they sold parts of the company. Their investment was positive, and most of it was given in dividend. Like 70% of it was given to the shareholders. So Orkla is shareholder friendly. Debt and debt handling. The debt have been increased the last few years. Debt is used for investments. I just mentioned that. Here you can see like the investment part I talked about in the last round. Orkla do actually have quite a good control of interest. When looking at their cash flow, it's not really noticeable. Debt and equity is at safe levels, but it is a negative movement in debt and equity. So the closer to zero, the better. Zero means literally no debt. Since 2014 to 2022, it has increased with 20%, and when it reaches 100%, it's literally the same amount of debt as equity. So yeah, like I'm not a big fan of this change. And as you can see from 2018 to 2022, like that's a huge increase in debt. And like this debt is only interest bearing. So you have like current liabilities that will be added on top, and long-term liability is literally not added. So just be wary of that. Yeah. So the cash flow, it actually have been doubled since 2014. We're in Q3, no more dividends, everything looks good. Will be added. I think they have had new talks with the stores, so it should the prices they have increased them, so that looks good. At least Q4, like or 2022 looks rough. Like we're looking at another bad year, most likely. But in general, it's like it is doubled. They will be able to get back to this again. And they're investing hard. There is a continued use of cash flow for investments. So yeah, they're investing quite hard. They use a lot of the money, and when they don't have the money, they go straight for debt. So yeah, you see here in the top one, the increase, right? I'm not enjoying that part, or that is one of the things that I dislike the most about Orkla actually. Incoming headwinds, the Norwegian politicians are more hands-on, so they are literally wanting to control or take a more active role in what the Norwegian companies like, for example, Orkla are doing, because they're struggling a little bit. I don't think they will be voted in next time, and this might be one of the ways they want to try to push down the prices. So they want to make the prices more similar between all the stores, so a little bit more hands-on. Monopoly, yeah, Orkla almost have monopoly in Norway and possibly several other countries. They're big in the main market. Orkla do have control, but a lot of the stores are now starting to create their own products. Like in Scandinavia and the Baltics, this have not been a big thing before now, but like it's happening more and more, and they're normally cheaper. So this makes it that Orkla is meeting resistance, like their monopoly is being attacked, challenged, and yeah, we will see if this can actually interfere a little bit with their markets. Their prices, buying in grain, buying in sunflower seeds, have absolutely increased during the war, and this will pressure the margins. The negative media communication, at least in Norway, that is happening right now is huge. Orkla is constantly being flooded, like, well, constantly might be wrong to say, but they are being flooded with a lot of negative media communication where Orkla is being blamed for the high prices. So this might create an issue, negative sentiment. People want to switch more over to the store's own product, for example. But yeah, like this is something that we will see in the future, what is actually happening with that. When it comes to Orkla's future, short term, personally, I believe that they will struggle. Nothing does really look too clear, but like struggle is open. They will still earn money, they will still be safe, but they're not like their bottom line is not going to be as pretty. The costs of goods and demands will increase. They will continue to invest, and their dividends, if they can keep it to the same level, they will most likely keep it. I don't think that they will continue to increase it, but I might be wrong. And it's also an increased stake in green food. Like Orkla seems to be expecting to earn almost twice as much from vegan and vegetarian food now, like in 2025, than what they did in 2015. And they also actually have gone into big products like Naturli to make this happen. So that is an interesting area, and I've personally tasted some of the food, and it's actually nice. They have an evaluation range from 100 to 50 NOK. So I don't like to say how much a company will be worth. So when it comes to the evaluation range, I looked through a few analyses, and generally like they were mostly agreeing from 95 to 105 if you're bull, like positive to the stock, and between 50 and 55 if you're bear or negative to the stock. So that is something to think about. Another thing, if you're not a Norwegian investor, this might be very good. The Norwegian krone have now, at least since COVID, done very bad during crisis, but better outside of it. So you actually have the benefit of the Norwegian krone increasing, possibly in the future, if the crisis go down. So for a foreign investor, the Orkla share value that is around 69.70 right now, plus the Norwegian krone that is like 10 to 30% lower than normal, it's quite a big fall. The share is very cheap if you're working from a foreign country, or if you're having dollar or possibly euro and Danish krone. Orkla is also aiming to be an investment company. This is something they came out with in Q3, and I'm actually a little bit interested in that. I hope it will put more focus area, better leadership in different areas. So we will see how that turns out. They should be done with the preparation in March, I think, in 2023. So this is how it will look. Here you have like the Jotun, which is doing the paint, and yeah, like you can see, it's like the India brand have gotten its own place. This is actually clothing, so it might be changing here, I imagine. And this is how big like the pizza part have come. Like if you go on Orkla's homepage, they literally mention nothing about pizza in their own brands. Like this is all acquisitions the last 2 years, like since 2021 basically. So this is huge. Like we will see what comes out of it, and this part is interesting. And here, like yeah, a picture says more than 100 words is saying, and I kind of agree in this. So remember that Orkla is a defensive stock. Certainly doesn't look like it. Look at these downturns. Like this is just from 2018, like 2018, but it's kind of the same. Like in 2008, the share was over 105 kroners. Orkla have fallen like almost half of the value since 2008. So that is something to be worried about this stock. You would have gotten back a lot of it in dividends, but yeah, based on that, it doesn't look too good. And then this is actually not financial advice for anyone to buy or sell Orkla. It's just me giving an opinion, hopefully some insight in a share that you're not too familiar with, or yeah, just helping with some insight. And this is kind of just a simple analysis of a Norwegian company. So I hope it helps you. I really do. So cheers.